Obviously, it's a huge milestone for Roku becoming a public company, but yeah, our goal is to power every TV in the world, and we have 15 million active customers, but there's a lot more to go.
So for those people who don't totally understand the Roku model, there is the device itself, but also there is the advertising and services piece of it. And I don't think that everyone totally understands the breakdown of how that works.
Yeah, well, so we've done an awesome job of letting people know about the Roku experience. And when people think of Roku, they think of the Roku home screen, the devices, the Roku TVs. But that's, from an investor's point of view, that's not our business. Those are how we acquire active accounts. Our business is selling advertising, being a next generation ad platform, distributing content, being a next generation scale distribution, content distribution platform.
So but your revenue breakdown doesn't reflect that. I mean, 74% of your revenues, according to your S1 for 2016, is from the device, right? And then the rest of it is from the services the platform revenue, and 2/3 of the platform revenue are from ads. So you're talking a lot about the services component, but that's actually a much smaller part of the business.
Well, 80% of our gross profit in the first half of this year came from our platform business, which is advertising and content distribution. Advertising is the biggest part of advertising is our bread and butter. That's as the world moves to streaming, that means all TV advertising is moving to streaming. There's a huge opportunity to become the next generation advanced TV ad platform.
So the big question, a big question mark right now is, where does Roku fit within the ecosystem, if you will, among this competitor set of much better funded, dare I say, companies like Apple, like Google, and like Amazon? And also, what's the potential that some of those folks and others actually at some point decide that they don't want to put their stuff on your service?
I mean, Roku's position in the ecosystem is being the platform that ties together the customers, the advertisers, the users. And we've been competing with big companies for a long time very successfully. We have 15 million active accounts. It grew 42% year over year. And we do that by not spending a lot of money on marketing. Obviously, those guys have a lot more money. We do it by winning customer reviews. We have built a purpose-built operating system for TV. It's the best way to stream, and that's how we get customers.
But on this risk, so just this week, Google pulled YouTube from the Amazon Echo, right? You are Switzerland right now for most of these guys. They don't necessarily consider you to be in the same, to be the same competitor set. Is there a chance at some point that one of these guys decides, you know what, we won't allow you to actually run some of our content?
I don't know why they would do that. We're the largest platform for distributing content in the United States. If you want to reach the OTT audience at scale, you need to be on Roku. That's why we're partners with Amazon, we're partners with Google, we're partners with all content providers.
And are they all locked into a contract with you for a certain duration of time, or can they pull at any time? How does that work, given that all of them are jumping into this space?
Well, they've been in this space for a long time. They're strong partners of ours, all these companies. We do have contracts, but really what they really want is to distribute their content to our customers, which are the most engaged, active customers in the streaming world.
So as a Roku user, what do I get for putting up with ads? Because right now we're in a world where people don't want ads. That's why I use Amazon as my platform to gain access to a Netflix and to Hulu and to all the other apps that I have.
Well, people like free content. Free is one of the most top search terms on our website when people are trying to decide what to buy. And people leave the traditional pay TV ecosystem for a couple of reasons. OTT is a much better experience, but it's also less expensive. And so customers don't want to pile on, $10 subscription over $10 subscription. They want to have a few high-quality SVOD subscriptions for premium content, and they want to layer on a bunch of free content. And we're seeing that happening. Free content, ad-supported content is the fastest-growing segment on Roku. Today, actually, 40% of all viewing on Roku has ads in it.
When you wake up in the morning and think about your competitors, are you more worried about Apple, Google, and Amazon, or are you more worried about Samsung and smart TVs that try to incorporate some of this kind of functionality themselves?
When I wake up in the morning, I don't think about my competitors. I'm focused on how can we make our experience better? How can we allow our partners to make more money? How can we get scale on our platform? And smart TVs are actually the best way for us to build scale. 1 in 5 smart TVs sold in the first half of this year ran the Roku operating system, or Roku TVs, and that's going to keep growing. As just like smartphones have an OS, they have Android. A phone company doesn't make their own operating system. The same phenomenon is happening on TVs.
Right. Correct. So that's part of your revenue stream.
Pardon?
You license your software.
We do license, but for us, licensing to TV manufacturers is a way for us to bring more customers into our ecosystem, and then we monetize them with our ad platform and our content distribution platform.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.